Hello, everyone. Thank you very much for joining us today as we go over the latest numbers from Spectrum's monthly investor confidence indices. My name is Randy Ostrowski, a director here at the Spectrum Group, joined by my colleague Kent McDill, our senior writer. After Kent has the opportunity to go through our latest confidence index data, I'm going to give you some highlights from our most recent in-depth report on how folks set their financial affairs in order through their latter part in life that we call Down to the Last Detail, which we just recently published. Again, we're going to go over the indices. We're going to talk about Down to the Last Detail. And as always, if you've been with us on one of our monthly webinars before, at the end, I always like to give a brief recap of what we have going on with our current Wealthy Investor Series reports, as well as review the capabilities of our visual analytics technology. But before I talk about our Down to the Last Detail report, I'm going to hand it over to my colleague, Kent McDill, who's going to be talking about the data from our January investor indices. Kent.
Thank you, Randy. I'm here to present to you the results of the Spectrum Confidence Indices and Household Outlook for the month of January 2020. Let's begin with this historic overview of the Spectrum Indices, which took a significant jump in this month, January 2020. The Spectrum Millionaire Investor Confidence Index rose by 14 points from 1 to 15, reaching the highest point in over a year. Note also that the index is similarly improved year to year from the January 2019 number, which was low due to the deep dive the stock market took in December of 2018. The Spectrum Affluent Investor Confidence Index also rose, moving out of negative territory, going from -2 to 8, getting out of the negative territory where it was for 6 of the last 13 months. The affluent number combines responses from investors with 500,000 or more in investable assets, while the millionaire number indicates the attitudes of those with $1 million in investable assets. So you can see that the wealthier investors have a little bit greater confidence than those without $1 million in investable assets. These high indices are likely influenced by a pair of factors. The first is that the survey was conducted January 17th through the 22nd, beginning 2 days after President Trump and the Chinese president agreed to the first step in a complete trade agreement between the two global economies. Likewise, many of the investors probably had a chance to look at their financial statements from the year 2019, which indicated huge growth among their equity investments. And since the stock market was remaining in such positive territory through the middle of January, they were likely to want to jump on board. Back in August of 2018, the SMICI reached 20 and the SAICI reached 8. And in the 17 months since then, the SMICI got above 10 only a couple of times, and the SAICI only got up to 6 in June of last year before the results from this month. In August of 2018, there was similar market growth as there is now, and there was no significant holdbacks. It was very similar to today's atmosphere in that even investors with democratic leanings were taking advantage of the market growth to invest in equities. There was still talk of global trade wars, but the stock market was mostly ignoring those talks, and investors felt it was the right time to jump in. If you look at the index from June of 2019, when the SMICI is at 13 and the SAICI is at 6, those numbers were influenced by talks of interest rate cuts from the Federal Reserve, as well as an impending G20 summit during which President Trump and the Chinese president were supposed to be talking about their trade negotiations with an eye toward settling that global trade dispute. Although both of those news items were speculative at the time, they did cause investor confidence to jump, but because they were speculative, that may have been why the jump wasn't as high as it was back in August of 2018. 2 months later, you can see that there was a deep dive in the index because the trade agreement details went sour and the word Ukraine came into our vocabulary, causing the Spectrum indices to drop as they did. Over the next few months, there was a steady, if not consistent, rise in the Spectrum indices, coming up to where we are now in January. This chart shows the increased interest in equity investing from December to January, and those percentages for January are unusually high. For individual stocks, 28% of investors expressed intentions to increase their investments in individual stock products, and that's the highest percentage since June of last year. The 36.8% of investors with intentions to increase investing in stock mutual funds was the highest rating in a year and a half, dating back to October of 2018. Equity investing is the component of the index which most directly causes a rise in the overall index number. The Spectrum Household Outlook is a measure of how investors feel about the future regarding 4 components of their household. Joining in the enthusiasm from the confidence index, the outlook in January rose to 26.7, the highest level in the past year and the highest since September of 2018. For comparison, however, the outlook stood between 25 and 30 for 9 consecutive months from July of 2017 to March of 2018. So this outlook among investors has been higher in recent years. There are 4 components to the household outlook, but the one that moves the most and is the most indicative of the overall outlook is the attitude towards the economy. In January, the outlook for the economy among all investors rose from negative 8.8 to positive 9.2, a change of 18 points. That outlook number for the economy has been negative for 6 of the past 13 months. Despite all of the talk from the White House and all of the occasional indicators that show the economy is strong, investors have not been this positive about the economy since September of 2018. You can see that the move from December of 2019 to January of 2019 to January of 2020 is similar to the way the outlook for the economy improved from January to January. It is a reminder that many investors do not invest in equities and do not regard stock market results as a pure indicator of economic stability. More details about the Spectrum Indices and outlook are available upon request, and I will now turn this conversation over to Randy, who will discuss our new study down to the last detail.
Thank you, Kent. Now we're going to discuss a few of the high-level data points from our most recent in-depth report that we call Down to the Last Detail. And again, as I mentioned earlier, this is kind of a look at how folks set their financial affairs in order. We know there are, when it comes to managing one's financial blueprint, there are a lot of uncomfortable topics and things that are challenging to discuss, and certainly mortality is one of those subjects that you can't avoid it, but it's something that needs to be addressed, certainly from a planning perspective needs to be addressed. And especially from a financial advisory standpoint, advisors really need to be aware of the potential for lack of end-of-life planning among their current clients as well as their prospective clients. And as an industry, we need to do a lot better job educating and ensuring our clients that they have the proper tools in place to make the best decisions possible for their end-of-life matters. The research for this particular report was fielded in the fall of 2019, utilizing an online panel of wealthy investors and households across the United States. We had a total of almost 1,800 individuals that responded to the survey, all of whom had between $100,000 and $25 million in net worth, not including their primary residence. We also made sure that they were the main primary household financial decision maker, or that they shared jointly in making the household financial decisions. The first question that we asked was just kind of a very generalized survey question to try and get a grasp of the types of experiences that our respondents had when it comes to end-of-life planning. So whether that's something that they have particularly been in direct responsibility for, or something that they've had a little bit of a part in. And you can see here, there are many folks that have been responsible for working with those who have passed away recently within the past decade. Same number that have been responsible for executing those plans. And then some that have been very responsible for putting together current financial plans in anticipation for those that are passing away. So there's a wide variety of representation within our sample size here for this particular report relative to the experiences that our respondents have had when it comes to end-of-life planning. Now, we also asked a question, whether or not the respondents felt prepared for their own end of life from a financial perspective. And you can see here almost 90% said they consider themselves at least somewhat prepared when it comes to their passing away and how their assets will be taken care of and distributed. Yet when we dig a little bit deeper into our data, we see that less than 50% of these respondents have a living will, less than 50% have a medical power of attorney, and less than 50% have a financial power of attorney. And less than 2/3 actually have a will. And really, this last sentence here, talking about the proper identification of beneficiaries, 1/3 of these wealthy investors have not even completed the step of identifying who the beneficiaries are on their financial accounts. So sometimes it's the most simplistic things that advice can have a very tremendous impact on. So just a reminder that when you're working with your clients, to even ask the things that one might assume are already in place, do not gloss over those simple questions. Make sure that even something as rudimentary as having designated beneficiaries in all financial accounts have been taken care of before going into some of the more complex planning needs. Here we ask a question, and this is certainly not mutually exclusive. This is an option where the respondents could pick as many of these as have been applied to them relative to what they've been involved in when it comes to end-of-life planning. You can see here, you have a number of folks that have been an integral part of a friend or family's funeral, burial arrangements, and certainly you see as you go down, we have both the medical power of attorney for a friend or a family member, as well as their financial power of attorney at 35% of involvement, so over a third there. When it comes to the level of involvement, it's the types of questions that you ask, and based on the responses you hear, that's when you need to determine how much education you need to provide. You can definitely never say too much, but you can certainly not say enough. And so when it comes to some of these issues, especially when it comes to the more complex, legally related themes that we have, you need to make sure that you're doing a very diligent job of telling your clients exactly what they need to know and how things work. Here we ask a question about whether or not there was a starting of or an increase in the usage of a financial advisor of a loved one after you kind of had an involvement and an experience in the planning for their estate. And you can see when you look at the top two there, you see almost 25% had a significant or at least some, but not as much as they could, increase in involvement of interaction with their loved one's financial advisor or financial planner after becoming a part of the discussion and dialogue relative to their end of life and estate planning decisions. So this is something that when it comes to increasing your opportunities with your current clients and their relatives, it's very important that you have them involved in those discussions and in the planning, talking, because it's something that can not only be of integral help in making sure that everything is lined up for that person who might soon be passing away, but also allows for you to develop relationships for that next generation. Here we talked about different levels of familiarity with some terms that are out there when it comes to end-of-life planning. The good thing is when asking this on a scale of 1 to 100 with 0 not familiar at all, 100 being very familiar, the responses are overwhelmingly positive in the way that most of the respondents do feel quite confident and familiar with all of these different terms. Again, that doesn't take away from your responsibility as an advisor or provider to make sure that they truly understand what these terms mean, but it is a good sign to know that most feel quite familiar. And you can see here the impact of those that have already said it. Again, we had 35% that said they've already been a financial power of attorney previously. So that gives them an even more in-depth perspective relative to their familiarity with these different terms. So again, if you have someone or are working with someone that has had that experience in life, although they will be more familiar with these terms, again, it's imperative that you continue to make sure that they learn and understand any sort of changes that are going to be made to any of these important documents. If you want to learn more about that particular down to the last detail report, I certainly hope that you reach out to myself or one of my colleagues here at Spectrum. As always, in addition to these one-off in-depth reports, we have our annual Wealthy Investor Series. We'll be going into some of these topics right now as far as the survey planning and the design of the questionnaire. So please don't hesitate to reach out if there's any interest in submitting some thoughts on these 6 topics that we'll be attacking here in 2020. And of course, I'm happy to go through our new, well, not new now because we've had our visual analytics technology in place for quite some time. But if you have yet to demo the technology or have a chance to look at it, I would welcome the opportunity to walk through it with you and talk to you about some of the unique characteristics that it offers to our clients and how different firms we work with leverage the technology and everything that we have to offer here at Spectrem. So I want to say thank you once again on behalf of the whole Spectrem team and Kent McDill, our senior writer. We do hope to speak with you about Spectrem and how we can be a resource for you and your firm at some point in the future. But in the meantime, all the best and have a great day.